Well, hello, and happy New Year. Happy 2022. You can tell my voice, it's hoarse. It's getting hoarse. Even in this week, we've had a few team members and family members of team members that have tested positive for COVID. And I wake up this morning to record this, to talk to you, and I'm hoarse. So we'll see how we make through this. I hope I'm understandable. Maybe we can get our marketing team to clean it up, but I think they would have cleaned up a lot of videos up until this point and made my voice sound better in years past. But what's going on this week? You know, we look at the year 2022, and if you're paying attention, if you looked at some of your emails or some of you'll be getting these trade confirmations. We've made a lot of rebalances here at the beginning of this week. Why is that? So let's start off, and I'm going to take a phrase from Clint Sorensen, our chief or our lead investment strategist. And he says this phrase a lot. If you get the business cycle right, you can get the market cycle right. And so what do we believe that we're seeing this year? What do we think that we're going to see this year? Think in the first half of the year, we're going to see an economic slowdown. That doesn't mean it's going to go negative necessarily. Mathematically, we've said that it could very well possibly go negative in the second quarter. But mathematically, because of the big rebound from COVID in 20, the big rebound in the spring of 21, the spring of 22, we could see some mathematical negative numbers. But the economy is slowing down. Market's going to respond to that. We're going to see a rotation to quality. We're going to see a rotation to low volatility in the market. So I already started seeing some of that through the holidays. One of the great ways you can look at that is on a daily basis, look at what the NASDAQ was and what the Dow Jones does, and which is winning over the other one. Now, keep in mind, you're not invested in either the Dow nor the NASDAQ, but it just kind of gives you a reference point of what to look like or what to look at. So early in the year, we think we're going to see an economic slowdown. Later on in the year, we think we're going to start to see inflation slowing down. And so, you know, a lot of times we talk about inflation, and we had really fun words last year like transitory and temporary and things of that nature. And so one client said to me, said, Chris, I'm just spending more for the stuff I used to buy. All right, I get it. That's what inflation is, the price of what you're buying going up. We think we'll start to see that slowing down in the second half of this year. So what are we going to do about it? What are we looking at? What are we going to do about it? As I said earlier this week, we made some trades in almost all of our accounts, touched almost every one of them. Most of these trades are just quarterly rebalances. We want to reset your account to the correct risk and objective parameters that you and your advisor set together. So that's what the first of this week on January 3rd, that's what the majority of those trades were about. But it's also us following a lot of our rules that flow within different sleeves of those models. So we're seeing more of a rotation to quality. So we're rotating as well. We're seeing ideas like global assets over the US. We like value over growth assets. We like small cap stocks over large cap stocks. We like real assets like real estate or privately held assets over public assets like stocks, bonds, et cetera. And so we'll be looking to integrate those in all of your portfolios. And so don't be alarmed by all those trade balances. That is completely trading rebalances. Those are completely within our rules, and it fits within what you and your advisor have discussed. And so as you look at this year going forward, this is something I want to leave you with. What are your financial goals? Because a lot of times we look at a year like the year 2021 and we see these great returns in stocks and these low returns in bonds, and we you can get frustrated, okay? But that is the mentality of a relative return versus absolute results. And all of us as humans, we want absolute results on the downside. That means we don't want to lose any money on the downside, and we want relative returns on the upside, meaning if the stock market goes way up, I want to make all that money on the upside. A lot of times those two things are not realistic. And quite frankly, they don't matter if you're not reaching your goals, or what the markets are doing don't matter if you are reaching your goals. So my big encouragement for you is, what are your financial goals? Number one. Number two, have you and your financial advisor with Sound, have y'all discussed those goals? Okay. Do you have a plan to reach those goals? Okay. And number three, if you are, great. Make sure that you have a plan to continue to reach those goals. If you don't, let's do something about that. All right. Let's make 2022 a year where you are reaching your financial goals. I'll be excited for you to do that. Look forward to seeing y'all in the dinners we have planned coming up, in the meetings we have planned coming up. Hope you have a wonderful new 2022. Take care. God bless.
For disclosure and citation information, please go to www.soundfsg.com/disclosures.